Hello friends, Radhe Radhe. Welcome to Gopala Education Hub. So today I will discuss the question number 10, chapter 11, financial statement of companies, CA Inter Advanced Accounting. Okay, so let's start. First of all, we have been given the balances after preparing its P&L account. So we have a equity share capital 8 lakh, 80 lakh, sorry. Colin areas, land, building, plant and machinery, furniture and fixtures, security premium, general reserve, P&L balance, loan, other loans, short-term borrowings, inventories, trade receivables, advances, trade payables, provision for taxation, unpaid dividend, cash in hand, balances with banks, and we have the following additional information was also provided in respect of the above balances. 50,000 fully paid equity shares were allotted as consideration for land. 50,000 fully paid equity shares were allotted as consideration for land. Okay. Next we have the cost of assets are. So the cost is given. Point to be noted that cost is given to us. Okay. So we have this cost. Trade receivables are due for more than 6 months. Balances with bank, this which is not a scheduled bank loan from loan is a long-term loan, simply stated. The balances of rupees 26,30,000 in the loan account with PFC is inclusive of rupees 1,34,000 for interest accrued but not due. The loan is secured by hypothecation of land. Okay. Now other long-term loans includes loan taken from Nixis Bank. Other long-term loans are also given. So loan taken from Nixis Bank, amount repayable within 1 year is rupees 4,80,000. So this will be the short term and the rest is the long term. Loan taken from directors, this is the amount. Bill receivables for rupees maturing on 15 June 2001 has been discounted. Short-term borrowings includes loan from Naya Bank, loan from directors. Transfer of rupees 35,000 to general reserve has been proposed by the board of directors out of the profits for the year. Okay, and these are the short-term borrowings. And inventory of finished goods includes loose tools costing rupees 5 lakh which do not meet definition of PPE as per AS 10. Okay. Okay, so these loose tools are not the PPE as per AS 10, so this will be included in the inventory itself. Okay, so we will deal with it and while the answering the question. So let's what's the demand of the question? You are required to prepare the balance sheet of the company as on 31st March as required under part 1 of schedule. So we need to prepare only balance sheet because we have been given the P&L balance as well. Okay, so let's start. We have been given the solution as here. See, equity and liabilities part, that is shareholders fund, share capital. So share capital we have a share capital of rupees 80 lakh, and in adjustment we have been given that 50,000 fully paid equity shares were allotted as consideration for land. We have a total 80,000 how much is the share, how much is the total shares? 80 lakh divided by 50, approximate 1,60,000 approximate. Yes, yes, 1,60,000 shares. We have a total 1,60,000 shares, and 50,000 share are allotted as consideration for land, but still it will be included in the capital account, capital equity share capital. So we will reduce 15,000 as a call-in arrears from the 80 lakh. Okay, so the capital will be 79,85,000. Yes, 79 lakh 85,000. How it will become? 80 lakh minus 15,000 call-in arrears. Okay, so capital amount is 79 lakh 85,000. Okay, now reserves and surplus. So now reserves and surplus. In the reserves and surplus, we have we have in the reserve and surplus we have a securities premium, general reserve, P&L account. Okay, so in reserves we need to transfer the amount also. So first of all, reserve and surplus we will include the security premium account, general reserve and P&L account balance. Okay, so now we have some adjustment related to reserves also, that we need to transfer some amount to the reserves. See here. Yes, transfer of rupees to 35,000 general reserve has been proposed by the board of directors out of the profits for the year. Okay, so how much is the profit for the year? Profit for the year is 5,80,000. So we will reduce the 35,000 out of the 5,80,000 minus 35,000, and this 35,000 will be added into the general reserve amount. Okay, so total will be the same, but we are reducing from the P&L and adding to the general reserve account. Okay, so these three items will come into the reserves and surplus. Okay, and any other reserves adjustment, then we will check. Okay, so next part is let I show you. So we have a reserves and surplus. Notes are given here. Just I show you. Yes, here. See, share capital, we have a total 1,60,000 shares, and out of it 50,000 for consideration other than cash, 15,000 less call-in arrears. So total is the 79,85,000. Here general reserve we are adding 35,000 here. So 9,76,000, and security premium account, and we are reducing 35,000 from here. And 5,45,000 here. Okay, so 30,21,000 here. Okay, so we have a total of 30,21,000 here. Okay, so now we will come on the non-current liabilities. Okay, so non-current liabilities we have a long-term borrowings. Okay, so in the long-term borrowings we have some loans given in the question. So let's check how much is the loan amount total. So we have a loan from PFC secured by hypothecation of land 26,30,000, but there is one adjustment given related to it in the additional information. So let's check. So what's the adjustment is saying? The balance of this in the loan account with PFC is inclusive of rupees this interest accrued but not due. So we will reduce out of the 26,30,000 minus 1,34,000 we will reduce out of it. Okay, and other long-term loans is 22,50,000. Okay, and out of other long-term loans we have a loan from Nixis Bank 13,80,000, and out of this we will reduce the 4,80,000 because it is a short-term loan. Rest is the long-term loan, and loan taken from directors 8,50,000. So total amount will be 8,50,000, 13,80,000 minus 4,80,000, approx 9 lakh. And out of this 26,30,000 minus 1,34,000. Okay, so this will be the total amount of long-term loans. Okay, so yes, and now we have a current liabilities. In the current liabilities we have a trade payables if given in the question. So let's check. Yes, we have a trade payables of 8,13,000. Any adjustment given? Let's check. No adjustment is related to the trade payables. Okay, so we have a trade payables. And any other yes, then trade any other short-term loan. Yes, we have a 4,80,000 of loan. This is the loan. This is the short-term loan, or you can say the loan short-term liability, or the other liability we can just put into into that head, but mainly it will go into the short term borrowings part. See here, short term borrowings. Okay, in the short term borrowings it will be like 4,80,000 here, 4,80,000, and this loan, this interest amount will be added 1,34,000. And also let's check any other short term liability. Yes, we have a short term borrowings here, like loan from directors 48,000 and loan from Naya Bank 1,16,000. Okay, so this will be included total. Let's check the notes to accounts. See here, we have calculated to a long term loan 26,30,000 minus 1,34,000 we have reduced. So this is the long term loan from PFC. Unsecured loan from Nexus Bank 9 lakh. Okay, we have reduced 4,80,000. And next we have another loan from directors 8,50,000 and others 20,000. Let's check from where they have taken this 20,000 amount. Maybe they have given a loan or other loan. Or anything we have missed out. Maybe we are missing out here, but let's wait. Maybe we will find out at any other point. Okay, so let's we discuss another part first. So we have a short term borrowings loan from Naya Banks, that is 1,16,000. It is given in the additional information. See here, a loan from Naya Bank 1,16,000. Okay, and loan from directors 48,000, loan from directors 48,000, and loan from Nexus Bank 4,80,000 given here. See here, and others. In others we have a 1,34,000. Okay, and 1,34,000, and also we have some other liability here. Okay, they have included the here in other current liabilities, but we have some short term borrowings also here, 4,60,000. But I think this short term borrowings is here. Yes, this short term borrowings includes 1,16,000, 48,000. Okay, they have just given the bifurcation, but the total is 4,60,000. So this is the, like, we will show just loan from Naya Bank, this loan from director, this, and rest means the 4,60,000 minus 1,16,000 minus 48,000. So it will come to 2,96,000. Okay, so this is the separate, these two are the separate, and this total total of this amount, total of this amount, and total of these three amount will be 4,60,000. Okay, this will be the 4,60,000. Okay, so this will be the 4,60,000. Then it is a short term borrowings. Now other current liabilities, other current liabilities, 1,34,000 of the interest will come. Okay, so now Now unpaid dividend. This provision for taxation will come into the short term provision head. Okay, trade payables we have taken already. Unpaid dividend account, so this will be other current liability 70,000 and 1,34,000 of interest amount, and this 3,80,000 will come into the short term provisions. See here the note. Yes, provision for taxation, that is 3,80,000, and unpaid dividend account 70,000. Okay, so this will be the total 2,04,000. Okay, 2,04,000. Now PPE. We will include the PPE. We come on to the non-current assets part. So non-current assets part, we have given the information about the assets, that is land, building, plant and machinery, furniture and fixtures. Okay, so we have 25 lakh, 30 lakh, 24 lakh and 13 lakh, and we have given the cost also. So cost of the asset is building 32 lakh, plant and machine 30 lakh, furniture and fixtures 16 lakh 50,000. So difference will be the depreciation. Okay, so that I show you in the notes to accounts. See here, land will be the same 25 lakh, and building cost is 32 lakh depreciation, and the amount is given in the trial balance is 30 lakh, so 2 lakh is the depreciation. Okay, so it is easy, you can calculate the difference between the cost and the value at the end of the year is the depreciation amount. Okay, so now we'll come on the we don't have any intangible assets, so we'll come on to the current assets part. Okay, in the current assets we have a first trade receivables. Okay, so in trade receivables we have a 17,50,000. Okay, so 17,50,000 trade receivables. So any adjustments? Yes, we have in trade receivables, we have a trade receivables of rupees 4,86,000 due for more than 6 months. Okay, so trade receivables for rupees 4,86,000 due for more than 6 months. So we will just show it as a separate bifurcation, that which are due for more than 6 months, which are due for others. Okay, so out of the total trade receivables of rupees 17,50,000, we will reduce, we will show 4,86,000 for due for 6 months, and rest is the others. Okay, now inventory part. So in inventory we have a finished goods, raw materials. Okay, any other adjustment related to the inventory? No, but yes, we have given one point that inventory of finished goods includes loose tools costing rupees 5 lakhs, which do not meet the definition of PPE as per the AS 10. So it is also included in the inventory of the finished goods, that is a 5 lakh. Okay, so 5 lakh will also come, and 45 lakh and the 13 lakh will come also. So it will be total approximate 18 plus 45. Okay, so 63 lakhs amount of inventory will be. Let I show you in the notes or accounts. Yes, so we have a 13 lakh, we have a 40 lakh, and we have a just a second, we have a loose tools also. Okay, so we have a loose tools of 5 lakh also. So total amount is 58 lakh. Okay, so now trade receivables out for exceeding 6 months 4,86,000, and others is 12,64,000. So total amount is 17,50,000. Okay, so total amount is 17,50,000. 17,50,000. Okay, now we have other, let's see any other assets given to us. Any other current assets we have been given which we need to mention? First of all, we tick out everything that yes, we have adjusted these. Yes, correct, done. We are done with it. Yes, we are done with it. Yes, yes, yes. Yes, we have advances, short term advances, so it will come into the short term loans and advances 3,75,000 in the balance sheet. Okay, so it will become, and but cash in hand we have a 70,000, and balances with bank 4,14,000. There is one adjustment related to bank balances, that balances of balance with banks include 56,000, which is not a scheduled bank, so we will just show as a bifurcation. Okay, that from the unscheduled or from the scheduled bank. Okay, that's it. So this adjustment is done, this is done, this is done, this is done, this is also done, this is done, yes, this is done, this is done. Okay, it is just let I complete first rest of the part. So we have a balances with bank, with scheduled banks, with other banks, and cash in hand. So total we have 4,84,000. So about the bill discounted, we have a contingent liability, bill receivables for rupees 1,60,000 maturing on 15th June 2001 has been discounted. So there is a contingent liability of rupees 1,60,000. Okay, so there is a contingent liability amounting to rupees 1,60,000. How much is the contingent liability? There is a contingent liability amounting to rupees 1,60,000. Okay, because we have discounted the bill. Okay, so let's we are done with the balance sheet, but let I repeat once again the balance sheet completely again to you. Okay, so just a second. See, we have been given the information about the equity. So first of all, we will calculate the equity part. So we have 80 lakh minus coal-in arrears, that will be the equity share capital. Rest then we will calculate the reserves and surplus. In the reserves and surplus, we have a securities premium, general reserve, P&L account. Okay, so in the security premium, this will, and general reserve 9,41,000 because we have been given one adjustment that 35,000 will be reduced from the P&L and will be transferred to the general reserve account. So 35,000 we have added, and we have reduced 35,000 from the profit and loss account. Okay, so let I show you the notes to accounts. See here, so we have 9,41,000 added here, and 35,000 are reduced from the P&L account. So total will be the 30,21,000. Okay, so now it will this is the reserve and surplus amount, this is the capital account. Okay, so now we come on to the long term borrowings. We have a long term borrowings from the PFC 26,30,000, but out of this 1,34,000 is the interest amount. So we will reduce the 1,34,000 amount. Yes, you see here 1,34,000 amount we will reduce from here, the interest accrued but not due. Okay, and other long term loans we are also given for 22,50,000. Out of it, 22,50,000 we have a loan from Axis Bank 13,80,000. Out of 4,80,000 out of this 13,80,000, 4,80,000 is of a short term nature. So rest 9 lakh is the long term, and 8,50,000 is the long term loan from the directors. So total will be 17,50,000 and 17,50,000, and this will come into the short term loans, this will become into the long term loan. So it means out of 22,50,000 we have a 4,80,000 of loan is the short term loans. Okay, so let I show you in the notes to accounts long term borrowings. So see here, we have a 26,30,000 minus 1,34,000. So total is the 24,96,000. Okay, so an unsecured loan, we have a loan from Axis Bank 9 lakh, and rest is loan from directors 8,50,000. Yes, I was saying what is the 20,000. So 20,000 is the amount of the loan which is remained. Like see here, we have a 22,50,000 total amount of other long term loans. Okay, out of it 9 lakh is the long term loan, and rest is 8,50,000. 8,50,000 is the also long term loan, and the total amount is 22,50,000. We have reduced the 4,80,000 out of 22,50,000. 4,80,000 we have reduced. So how much is the amount we have remained here? That is 17,70,000. Okay, and how much is the total here? 17,50,000. Okay, so 20,000 difference of this amount, 20,000 is the other long term loans. Okay, so this much is the 17,50,000. we have a total amount after reduction of a short term loan is 17,70,000, and so 20,000 is the other long term loans. Maybe when you will solve on your behalf, then you will find out the answer. Okay, so simply stated, we have a 22,50,000. Out of 22,50,000 we would reduce the 4,80,000, and out of 4,80,000, 4,80,000 reduced we have, then we have a remained with amount 17,70,000, and out of this we will reduce the 9 lakh and the 8,50,000. So we are remain with the 20,000 of the long term loans. Okay, so this is the 20,000 of loan amount here mentioned in the long term liability, long term borrowings. Okay, see here, so we have a total loan amount of 17,70,000. Okay, so total amount, total of total long term borrowings is 42,66,000. Okay, so now short term borrowings. In the short term borrowings we have 4,60,000. Okay, in the short term borrowings also we have given the bifurcation, that a loan from Naya Bank, loan from directors. So this is just a bifurcation. Out of 4,60,000 we have a this much, we have a this much, and rest is the others. Okay, so let I show you in the notes to accounts. See here, loan from Naya Bank, this much loan from directors and others, but this loan will be from the long term borrowings we have reduced, because they have mentioned that 4,80,000 is the not of a long term nature, it is of a short term nature. See here, we have reduced 4,80,000, so it will come into the short term borrowings. Okay, so this is the short term borrowings total. Okay, for 9,40,000. Now there is a provision given, also trade payables given also. That is the short term borrowings. Then we have a current liabilities. In the current liabilities we have a trade payables of 8,13,000, and we have a provision will go into the short term provisions amount, and unpaid dividend account we have other current liability, and also one more current liability is of interest accrued and due but not due, sorry, interest accrued but not due, that is 1,34,000. Okay, so this will be the amount in the other current liabilities part. Okay, so let I show you the balance sheet current liability part. See here, we have a short term borrowings, yes, 9,40,000. this is the long term borrowings, this is the reserve and surplus amount. So trade payables 8,13,000. other current liabilities we have a 2,04,000. in other current liabilities we have a unpaid dividend account and interest accrued but not due. Okay, so 2,04,000 here, and the short term provisions is 3,80,000. so short term provision is given 3,80,000 provision for taxation. See here, that is 3,80,000. Okay, so we are done with the equity and liability part. Now we will go into the non-current assets part. So in assets part we have a non-current assets. We have a non-current assets, building, land, building, plant and machinery, furniture and fixtures. You can compute the cost is given, value is given, so we can find out the depreciation, and we need to show it as a PP. Okay, so now no intangible asset is given, just we need to move to current assets part. Okay, or short term advances or loans. Okay, so we have current assets part. In current assets we have a trade receivables of 17,50,000. we have a given bifurcation, like 4,86,000 are due for more than 6 months. Okay, so 4,86,000 is for due for more than 6 months, and rest is the less than 6 months. Okay, so 17,50,000 is the amount. Now we have advances, short term advances will come, and in the yes, and then we have a inventory also. Yes, we have inventory of finished goods, raw materials, and also we have inventory of loose tools also. So see here, we have a loose tools of 5 lakh also. So this will also come into the inventory part. So see here, inventory part 58 lakh is coming. How much is the amount total? 5 lakh plus 45 lakh, 13 lakh. Okay, so it will be total 58 lakh of amount. Okay, So this is the PP, this is inventory, trade receivables. I have already mentioned 17,50,000. We need to just show the bifurcation. Now cash and bank balance. Cash in hand 70,000, bank 4,14,000. But we need to show the bifurcation that out of this much is with the schedule, out of this much is with the non-scheduled. Okay, so 56,000 is which is not a scheduled, and other rest is part is the scheduled. Okay, so yes, we are done with all the adjustments, and now we have any other assets. Let's check. No. Yes, we have short-term loans and advances we have taken, that is 3,75,000 we have taken here. So we are done with the balance sheet. Okay, you can check on your own and try to solve it once, and if any problem then you can check the video again, pause and check and repeat the video. Maybe you will be able to sort it out, and if you have any query then you can ask in the comment box. I will be happy to answer. Thank you so much. Stay tuned. Radhe Radhe. Chapter is complete now. Chapter 11 is complete, and you can I will post more chapters, or if you have any query then please ask, and thank you so much. Stay tuned. Radhe Radhe. Bye bye.